Good evening, class. How are you? Hello, Francis. Are you getting me?
Yes, Gilbert, I can hear you.
Okay, that's good. Sorry for the delay. I was just looking to the credentials, and I hope now we have 7 attendees, and it's good enough to start. But before starting, I just want to pass an announcement. It's a small one, just to let the students know that as they are aware that there is a new income tax that was published, but as a per ICPAI policy, as also included in our syllabus, we start to examine new legislation. It means new law after 1 year. This means that for this sitting, we'll examine the old law, income tax law, which is published in 2018. And as well, in the next 2 sittings, it means April and August, we'll also still examine the old law. So we'll start to examine a new law from November 2023. So another things that I want to say before handing over Francis, it's just to remind the student how to use this platform. For those who want to raise any question, there is here the button of Q&A where anyone who wants to raise an issue or any question, he or may write his or her questions. And also, if he wants to talk, he can raise a hand here. Also, it is here. So I want this class to be more interactive, and I wish for those who already joined to take this opportunity to ask many questions as much as possible, because Francis is an expert, especially in these courses, and will help you also to address any issue that you have. So without taking much of your time, because also you have delayed, I would like to thank you so much, and also wish you a good session. And I hand over to CPA Francis Lazatsinda, and he will also talk himself later. Thank you so much.
Thank you. Thank you, Gilbert. Thank you for this this opportunity to do some sort of revision with the students. The class is quiet. These things of virtual sessions can be problematic because, okay, one thing I'm going to do, I'll just turn on my video just for a second and introduce myself so that you know you're not speaking to a robot. So that's me. Now you can put the name to the face. My name is CPA Francis Bazatsinda, and I went through the same program as you. Did CPA. I was among the first class, first lot from 2012. Graduated around the December of 2014 sitting. And since then, I've been involved in the CPA activities in different fraternities and capacities. And taxation has been one of my favorite subjects, be it on practicing it in my daily job or also supporting it in terms of providing tuition for it. So I know that this session is on assumption that you have been studying and you only have a few days to do exams. And what I'm going to do is to try my best to do some kind of a summarized overview, give you some hints, do some practice questions with you, and prepare you best to sit your examinations. So please, I don't want it to be a monologue. I want you to ask as many questions as possible. I want it to be interactive. I have prepared a lot of good material that I want to go through with you today. And I know we shall have another session, which is, I think, Friday. Yeah, Friday next week, if I'm not mistaken. Let me just confirm here. The next one is going to be on Friday. Yes, Friday, same time, Friday next week. So I will cover with you a good scope today, and then on Friday we shall wind up, and hopefully you will be more prepared to do your examination, okay? Now, to ensure that the quality of the sound and also focus the eyes on the real content, I'm gonna turn off my video. And now, let me turn off my video. Something quickly. I want you guys to tell me you can hear me. Can you say you can hear me? Can you give me, can you raise your hand if you can hear me? Or can you type here and say, I can hear you, or can you speak? All right. Okay. Kaitari, Sandrine, I see you can hear me. That's good. So I can see some messages of people who can hear me. Celeste, Christine, Jean, can you hear me? Marisa, Rebecca, Fred, Saviti, I need you guys to confirm if you can hear me. Thank you. All right. Now I'll assume everybody can hear me. So I'll go into it. Yeah. Okay. Can you see my screen? You tell me if you can see my screen. You just type here if you can see my screen and say you can see it, or you give me, you raise your hand. Okay. Now, okay, that's good. Thanks, Fred. So this is a brief summary of the scope of this course. And what we shall do today is to try to go through it. Of course, definitely we have 2 classes, which makes it quite incredibly insufficient, but you know, I will try as much as I can to make sure that we go through it and have as many practical questions as possible. Okay, thank you. So we will talk about a brief theory of taxation. We'll talk about the taxation of persons, and then we'll talk about the taxation of investment income. We'll talk about the taxation of business income. We have a complex concept of tax depreciation, what we call accelerated depreciation, which is one of the perhaps most complicated topic, which used to disturb me so much. We'll touch on value-added tax, and we'll talk on capital deductions, decentralized taxes, and then we'll also touch on the tax refunds and tax declarations. Then we'll talk about also the customs taxes, how the customs levies the taxes if you import things in the country and all that. So this is a brief high-level overview, okay, of what we are going to cover, okay. And now here is just a small hints, okay. Here is just a small hints, and the small hint here is that this paper has 3 hours and 15 minutes, but definitely you've got only 3 hours to write, and you have to attempt 5 questions out of 7. Now, you have to divide your time properly, okay? One mistake that most students do is to come, and before the paper starts, you're panicking. You don't know where to start, and immediately you rush to the complex numbers. And before you know, they tell you 1 hour remaining, and you've just done 2 questions. That is dangerous. So the first thing you do, once you get an examination, these are the tips I've put down here, okay? And this is from my experience as somebody who has done this paper and as somebody who has also practiced it over and over again. The first tip is that you get the paper, okay, and go through the entire exam and understand each question. In 15 minutes, read every question. Now, you identify what we call the hanging fruit. Yeah, just think of that word the way I'm mentioning it, like a hanging fruit, something you can easily grab. Now, those easy marks, those are the ones you need to talk first. It does not matter. I'm telling you, as somebody who has examined, who has marked, who has set, who has talked. The order in which you answer does not matter. Okay? You can say question 1A, and you jump and bring question 2B. Okay, although try to do one question at a time, but if you have to mix up things a little bit, just make sure whatever you answer, you head it correctly. I've seen some papers where a student puts on top question 3. When you go into the content, you find it's question 4. That is dangerous. You're risking losing marks. If the examiner is not careful and is not considerate, he's going to give you 0. Please, you have to be careful. Now, after identifying the free marks, the easy marks, okay? You add up the marks you can grab from the easy questions. Are you following me? You simply look at your questions, you start adding up the marks. Let's say you say, hey, I've seen here, hey, they're asking me tax avoidance and tax evasion, 2 marks, oh, those are 2. I've seen where I have to calculate payee, I am confident with payee. It has 15 questions, I can get 10, that is 12. I've seen another question here, it's on withholding tax and rental, maybe rental income tax. This one, I can do all of it, yeah? Then you say, okay, this is another 10. You add up your marks, and then you will realize that from the easy questions, you have like 40. If you find that you have like 40 marks from the easy questions, my friend, you've passed that paper. All you need to do those questions, even if you give it 2 hours, and then use the remaining 1 hour to find some 20 marks from the remaining questions. You get my point? So you start with the easy questions with the highest marks, a yini trick, okay? It is not just enough to say these are the easy questions. Start with the easy questions with high marks. Do not start with the small. Start with a question that has 5 marks, 4, 3, 10, 12, 15. Accumulate your marks. Number 4, maybe number 5, manage your time well. Do not spend time on a question with a few marks or on a question you can hardly attempt. Do not spend 30 minutes on a question with few marks. Do not spend 5 minutes thinking of a question that you don't even understand. That is being pathetic. You cannot have time to do a lot of thinking. The understanding is that you're coming in an exam, you know what you're doing. It's not a time to think. An exam is a time to do. You don't come in an exam to start thinking. And the last one, start with the easiest part of each question. Easiest part of each question. All right? The easiest part of the question. We'll go into some questions and I'll show you how some tricks. People start with the hard part and before you know, you're out of time and you've missed the easy marks. So if you can follow what I'm telling you, you go in an exam, find the easy marks, start with those questions, start with the easy part of the question, prioritize questions which are simple, but with many marks. Add up your marks like you're marking yourself. Boost your confidence. If you add up your easy marks, I don't want you to have 80 to aim at 80. This is a professional exam. You need to pass it. Get 50. If you can get 50, you're good enough to pass this exam. There's a lot of things you will learn after school that will be into detail that you'll never learn in school. So go to the exam with the purpose of passing the exam, okay? And prepare properly. Can you give me a hands up if you followed my simple advice here? Yeah? Okay, okay, thank you. Now, I will just take you into something brief here, okay? Take you into something brief here. These are just a small introduction on taxation. This can be very examinable, very, very examinable. And these are the easy marks I always tell you about. They can ask you about the principles of taxation, okay? Now, I was looking at the ICPAR notes and I realized there is this, the old CAT law, the old CAT study material that has very good introduction on taxation, okay? And it has all these principles of taxation. Even your tax study material, it has all the principles of taxation. So be prepared here. Look at the principle of legality, the principle of equality, meaning the law has to be to treat people equally. Treating people equally does not mean everybody pays the same tax, but everybody must pay tax equivalent to their income. Freedom, efficiency, the cost of collecting tax cannot overweigh the benefits the government gets from tax. Equity and benefit, certainty. Certainty means the taxpayer has to know when to pay. That is why, if you are an accountant like me, every month you're getting reminders from Rwanda Revenue Authority that your taxes are due for payment. You're getting reminders almost every day that taxes are due. Now, for the sake of this session, I'm not going to go and start defining each of these, but I want to challenge you. Take a few hours, go and revise the entire theory, the introduction part, the chapter 1 of taxation. Understand all these principles of taxation. The classification of taxes. This can also be examined. Direct and indirect taxes, advantages of each, progressive, regressive taxes. Understand tax incidence, tax capacity, tax evasion, and tax avoidance. These concepts, it is a disaster. It is so regrettable if you fail these concepts in an exam. Do you agree with me? It is so regrettable if you go in an exam and they ask you tax incidence and you don't know. This is the final resting point of the tax, okay? Someone pays VAT on importation of a vehicle, or maybe on importation of a phone. They sell it to a wholesale buyer in Kigali. When they have added that tax, the guy sells to a retailer in your shop nearby, charges VAT, and you buy it from the shop with VAT. So about 4 people have been paying the VAT, but there's only one person who has paid the VAT, the final buyer of the phone or the TV. The first person imports a TV from China, they pay import VAT at 18%. They will put it on the price. They sell it to a wholesale buyer somewhere in the city center. The guy in the city center will buy so many TVs in bulk. They're going to sell about 10 TVs. They will put that VAT they paid on the sale of the TV to the person who is selling it in a shop there near maybe City Plaza. And then you will go to the shop in City Plaza to buy that TV. They will sell to you the TV, they will put VAT. And then what happens, the wholesale guy in town will pay the VAT to the importer and sell it to you, sell to the retailer, charge VAT and collect the VAT. The retailer who has sold you the TV will charge you VAT and pay it, and will collect the VAT, they claim the VAT they paid to the wholesaler. In the end, they have not lost anything. They pay the VAT, collect the VAT. Finally, you, the consumer who doesn't have a team, they'll give you an EBM, but it won't help you. It will help you, yeah, because you have assured compliance, but you cannot claim that VAT. So you're the one who is getting out of pocket to pay the VAT. Does that concept make sense to you? That is tax incidence, okay? So here, to give you an example of that these things are examined. This is, I just got this screenshot from the June 2018 examination. It was 10 marks. Can you imagine these 10 marks? As a student of taxation, explain 5 roles of taxation in achieving budgetary objectives of an economy like Rwanda. 5, yeah? Okay, because I want this to be interactive, let me challenge you. Can someone just tell me some of these roles? Who can tell me these roles? Hmm? Who can tell me these roles? By the way, I'll send you these notes once we are done. Okay. Who can tell me the roles? Who can tell me the roles of taxation? Ah, come on. You cannot tell me you don't know these things. Hmm? Who can tell me the roles of taxation? So there is financing government programs. Taxation helps to finance government programs. Government has activities they have talked about in the budget. We shall make roads, we shall construct power plants, we shall construct schools, we shall construct hospitals, we shall construct ABCD. Okay? Taxation supports defense. Okay, you definitely understand defense budget must be so big. So taxation helps the government to ensure that defense activities are financed. What else? Taxation, yeah, helps in debt payment. The government gets money from taxation to pay the debts the government has. Okay. Now, there's also taxation helps the government, yeah, to guide or to direct the behavior the consumption. Basically, it is the tax effect on consumers, okay, or on people. Now, here it's about the behavior, okay, the consumption. This is all taxation. So what the government does is, if a certain product is not good for the society, the government can decide to levy so high taxes. If you know the excise duties, cigarettes are taxed more than 100%, okay? But if you import IT equipments, you don't import them. Perfect, Christine, thank you. Income redistribution, reduction of monopoly, security, budget, such as defense, etc. Perfect, thank you very much. So this is all, like she's saying there, okay? And also tax has on companies, okay? So the government can decide to direct the investment to certain sectors by favoring those sectors and putting tax incentives, okay? Let's say they want to promote investment in agriculture, okay? In IT, etc. So the government can use taxation to encourage investors to go in a certain sector, okay? So this is really, I'm just trying to refresh your memory. There's nothing new I'm talking about here. You just have to be prepared. Do not take anything for light. Look at this question, had 10 marks. These are 10 marks for you. But I've marked some papers and people get 10%. It means you're very, absolutely not ready. Differentiate between tax avoidance and tax evasion. You know this. You can read it. Avoidance is the deliberate dodging of tax, but which is illegal. And tax avoidance is not illegal, but it's just a legal way of optimizing on the loopholes in the tax system to minimize the tax debt, but without being illegal. The concept of tax residence, okay? You know this concept of tax residence. You know it? Yeah? So the concept of tax residence, I've just brought this law here, okay? If you have this law of 2018, all you do, you just come here and search, and you search the word tax residence, okay? Tax residence, and it's here. You understand? In taxation, you don't have to use your own words for such questions. An individual considered to be resident in Rwanda if he fulfills, has a permanent residence in Rwanda, has a habitual abode, is a Rwandan representing Rwanda abroad, or stays in Rwanda for this number of days. By the way, in the new law, these days have changed, but like Gilbert said, you don't have to worry about the new law for exam purposes. If you are doing taxation in your job, you have to worry about the new law, okay? But if you're not, but for the sake of this exam, you don't have to worry about the new law. So this is your definition of tax residence. All I want you to do, go into your notes, which you have already, or go and open this law, download it, it's everywhere. If you want, I can send it and read the meaning of this tax residence, okay? And the other question was, according to Article 11 of income tax, explain the main drivers of taxable income. And by the way, this is extract from past examinations. And imagine if these questions were in the same exam, you have so many marks without even touching your calculator. The drivers of taxable income, it's here, okay? Taxable income, yeah? It's here, sources of taxable income. They're all here. And they say Article 11, you see permanent establishment is here. Basically, just go and read these things. Huh? You see, this is what they were asking. The drivers of taxable income are the following. It's quite simple. There are 6. Employment, business activities, investment, capital gains, sale or lease or transfer of immovable property, sale or lease or transfer of immovable property allocated to businesses. Movable and immovable property. These are the drivers of taxable income. So I want to challenge you, please, for your own good. You still have some days to the exam. We're going to go into the details and look at it. I know some of you are saying now, he needs to do the calculations. I am an accountant. Calculation is what I do every day. But I'm telling you what I know. People get stressed with calculations and they miss the easy opportunities. Why would you fail something which is in the law? Does it make sense? Can one of you speak? I just like hearing the voice of my students. I've just allowed you guys, to talk. Okay. I've allowed you to talk. If you want to talk, you want to say something, each one of you, you're free to talk. Okay? Allowed to talk, allowed to talk, allowed to talk, allowed to talk. Everybody is allowed to talk. Okay? All right. Now all of you can talk. Okay? You can say anything, you can put up a hand and you talk. I'm just asking a question. I just want someone to tell us something. Yeah. Do you think it is necessary to read this law, to go through it article by article? Yeah, absolutely. It is necessary because you have seen it is purely examinable. This is evidence that it is examinable. Okay. Is there any question on the introduction, on the principle of taxation, tax incidence, tax residence, and permanent establishment? And this concept of permanent establishment is also very important. Yeah, you have to understand permanent establishment. It's here. It's Article 6. Read it. Okay. This is very examinable. I've seen permanent establishment. I've seen it in some questions. It comes and comes and comes and comes over and over again. Okay. So I need you to go and read permanent establishment, read tax residence, and understand this concept properly well. Okay. Now, I'll assume there are no other questions. This is just a snapshot I brought here to give you an example about tax residence that was being asked there. We just saw this. Okay. These are the conditions of being a resident person. And if you're an individual that you've been in Rwanda for 183 days within 12 months, you become a tax resident. If it's a company registered according to Rwandan laws, or a place of effective management in Rwanda at any time during the tax period, or a Rwanda government company. Okay. All right. Now, these are the common things which they ask. Let's talk about this one here. The past and potential question. By the way, I need this chart to be active. Okay? I need this chart to be active. Right? Okay. I need this chat to be active, please. Okay? Type your questions there and we interact. And feel free to unmute and speak. I would like to hear from you. All right? So this is one example. Explain the rules regarding residence of companies, how they differ from those applying for individuals. It's simple. We just saw this here. Permanent establishment, okay, for companies, and permanent establishment for individuals. Okay. So the rules of residence, we've seen them here for individuals and for companies. We saw here on Article 11. Was it Article 11? It is actually here. Okay. For companies is here. Individuals is here. And you have your 4 marks, like 3 marks almost. Okay. The next one is define permanent establishment in accordance with Article 16 of this law. This one takes 6 to 8 marks. All you have to do is come to the law and define your permanent establishment. It is here. You define it in a place, a branch, a factory, a workshop, a mine, whatever. Up to here, it's enough. And you have your marks. And sometimes they can ask you what things are not considered as permanent establishment. These are the ones here. Facilities for the purpose of storage, a stock of goods, all this, a pump aimed at personally packaging goods and all, purchasing goods and all that. So you just have to come and understand these concepts. And here, you're not going to understand these concepts by just attending the classes of best teachers in the Kigali or whatever. No, these are professional courses. No best teacher can make you pass taxation if you have no passion for reading it yourself. You have to read the law. You have to like it and you have to practice it. Okay? And number 3, understanding the activities that qualify and those that may not qualify for permanent establishment. This is very important. This is asked so frequently. To understand the activities which are qualifying as permanent establishment, and we just saw them here. These are the activities qualifying for permanent establishment. These ones here. Can you see them? You can put up your hand if you can see when I switch screens, if you can see what I do. You just put up your hand if you can see screens. Okay, Fred, thank you.
We're not seeing it.
You're not seeing it. It shows me it is presenting. What's wrong? How about now? Oh, sorry. How is it now? There's someone who said he wasn't seeing. Can you see it now?
Yes, I can see it.
Okay, now when I switch and I go to the presentation, can you see it? Can you see the presentation?
Yes.
Okay. All right, then it's fine. So we're here. So the question was asking you to show activities which qualify as permanent establishment and those that do not qualify. These are the activities that qualify. We've seen them: place of management, branch, factory, quarry, site of construction. And here they tell you a person is not considered a permanent establishment if that person, the following now: the facilities for the purpose of storage of goods, maintains a stock of merchandise of goods. Basically, if you are doing business in Nairobi, but you have your stock in Kigali, but you're not selling anything in Kigali. All you're doing is you're keeping your things here, and all the time you come and put them in a truck, take them and sell from Nairobi. That is not permanent establishment. But if you have opened up a shop, you are selling from here, that is a permanent establishment. So all you need to do is come. You don't have to try and think about permanent establishment from your own logic. Are you following properly? This is tax law this is not philosophy. It is not research. Okay? People do taxation from their own logic. Tax law is a law. You have to answer it. It is categorical. It is either as is in the law or it is wrong. Doesn't matter how you think it is. So this is not about how you think. You come and read it here. These are the conditions which don't qualify. And these ones up to number 6, they are the ones which qualify. Okay? And the other one was, which of the following individuals qualifies to be treated as a resident in Rwanda? Aline has a habitual board in Rwanda. Her job requires frequent traveling around the world, where she may be away for 2020, for the whole of 2020. Is this a permanent establishment? Who can tell me? A, is Aline a resident in Rwanda? Would she be considered as a resident? She travels, but she has a habitual board in Rwanda, and she may be away for the whole of 2020. Can she be considered as a tax resident in Rwanda? Come on, I need answers. Remember, we agreed this has to be interactive, eh? Didn't we? Because when you are so quiet, I will either assume you are following so well, or you're not following at all. So you need to give me reasons to have some fun in the class, yeah? Remember, everybody is alone in their house, and we are all following here on this internet. So I need you to be active. Can someone tell me if this is a permanent resident, if this is tax resident? Okay, what does yes mean, Marisa? Can you speak? Can you speak and tell us? Is it a permanent residence or not? Is it a tax residence or not? Yes, Fred.
Yes.
You have the microphone.
Yeah.
The
I'm
tax
not
resident.
hearing that you mean this the one with the 90 days?
No, I mean this one, A here.
A person considered not to be a permanent establishment if that person.
You know, the question was, which of the following individuals is treated as residents in Rwanda for 2020? And I came to the first one here. We said Aline has a habitual abode in Rwanda, but her job requires frequent traveling around the world, and she may be away for the whole of the 2020. Is she considered as a tax resident in Rwanda in that year?
Yeah, she is considered a tax resident, although she spends a year outside the country.
Why? Why do you think so? Because she's not in Rwanda for the whole year. Why do you think she's a tax resident?
But being outside for 1 year, maybe she went outside the country to represent the country, but she's a permanent resident of the country.
Okay, so your answer is correct. But the explanation I was looking for is this, Fred. They said
Yes.
Aline has a habitual abode in Rwanda. Do you see this word here? You see this?
Okay.
This is the game changer.
Mm.
Why? Because on the left, they say permanent resident means if you're a permanent resident in Rwanda or if you have a habitual abode. Nobody said she was going to represent Rwanda. Do not try to bring your logic into taxation.
Yeah.
Taxation is a law, all right? You use what is there. They will always give you a hint. Now, I expected you to have read on the left and you see the requirements for residents. If
Excuse me,
somebody
sir.
has a, yes?
We're not seeing where you switched.
You're not seeing the PowerPoint?
Yes, we are just seeing that gazette.
Oh, sorry, I'm on the PowerPoint here. Can you see it now?
Yes.
Now, I don't know where I left you, but what I was telling Fred, his answer is correct. But the explanation I was looking for is not to assume that maybe she went to represent Rwanda, what. There is this word here, a habitual abode. And on the left here, the conditions for tax requirement, if you have a habitual abode in Rwanda, it doesn't matter. If I am Rwandan, me as Francis, if I go and work from Russia for 5 years, it does not mean I'm no longer a tax resident of Rwanda. Because if I am a tax resident of Rwanda, if I have a permanent residence in Rwanda, if I have a habitual abode in Rwanda, if I am representing Rwanda in an embassy somewhere, I am taxed on my income that I earn from here and that I earn from abroad, locally and abroad. So she is tax resident. Okay, Fred, are you happy there? Sorry?
I'm happy with the answer.
Thank you, sir. Now, B, I hope everybody can see my PowerPoint. This chain is a Chinaman who is on a secondment. Secondment means, let's say you're working for a company like MTN from South Africa, and they send you to work in an MTN subsidiary that is in Rwanda, that is sending you on a secondment. A similar company in another country is on a secondment in Rwanda from 2nd September to 28th April 2020. This is the first visit to Rwanda and is living at the Marriott. Is this person a tax resident in 2020? Who can tell me if Chen is a tax resident in 2020? Remember what we said? If you stay in Rwanda for 183 days in a 12-month period, either continuously or intermittently, is considered as a resident, okay? In Rwanda for that tax period in which 12 months has been ended. Now, here they consider the tax period. For the sake of this tax law, the tax period in Rwanda, the standard tax period is January to December. All you have to do is count from 2nd September to 31st December. Has he spent 183 days? You see the way I'm putting them here looks like small multiple choice. But you know what will happen? They'll bring this statement in a question that has so many other things. And they will want you to know whether this person is taxable for that income in that period. Or they will ask you to talk about the tax treatment. That is why when you're studying it within like a kind of a case study, it opens your mind than just reading a straight bullet question requiring a bullet answer. Understood? So do you see why, if you count from September to December, are those 183 days, let's say 30 days September, 31 days, those are 61, plus 30 days November, 91, plus 31 days in December, that's 120, maybe 2. So it's definitely less than 183 days. So in the year 2020, this person is not a tax resident. Are you agreeing with me? Because he's not a Rwandan, but has not spent 183 days in this tax period. Okay? Now, in the new law, this is to give you a hint. Because in this law, it is not clear. There was something which was missing here. Because what people would do is you will come a few days in this year, next year you come a few days. Within 2 years, you have reached 183 days, but you have broken them down between 2 years and there was nothing, you've not paid any tax. In the new law, once you start studying it, practicing it precisely, because my wish and my hope is that this is the last time you will sit in this class. You will pass, all of you, and I will see you again at advanced taxation, probably. Okay? Now, in the new law, what they have done is that they will be aggregating the days you've spent intermittently over the past 2 calendar years. And if those days qualify for the minimum number of days mentioned, you will be a tax resident. Okay? But for now, in the current law, you look at 183 days in that tax period. If not, it's not a tax resident. Anyway, this was just to kind of refresh your memory on this whole concept of residence and permanent establishment. I want you to be on top of those two concepts. I want you to understand the theory of taxation. Once you know them, you know something will always come from them. Normally something comes, okay? These last two, in the interest of time, I'll leave you to practice them because I'll send you the notes. Because now, like this one here, Terry, a UK citizen and colleagues with Chen, was seconded to Rwanda for period December 2019 to January 20. Okay, this is January to December. And April 2020 to August. Terry has since returned to the UK after August. The secondment expired. So you just have to look at the days spent in that period and here, and you know. And then they say Marco is an Italian citizen who owns a series of Italian cuisine restaurants in Kigali, visited Rwanda for 3 weeks in 2020. Apart from owning businesses in Rwanda, he does not have a permanent house in Rwanda. Is this guy a resident? Is this person is a resident? Hmm? So what is resident here is his companies are residents in Rwanda. Because if a company or an association is established in Rwanda, it is a resident. But for him as a person, he only visited Rwanda 3 times. Remember, in business, the business and the owner are 2 separate entities, okay? All right, I hope you're still all seeing my PowerPoint. If you're not seeing my PowerPoint, you tell me. So I am done talking about this theory, okay, of taxation, permanent establishment and tax residence. Now, we're going to talk about employment income. I'm going to do with you a number of practical questions here to make sure that you are ready, because I can tell you, I have not seen a single exam where there is no question on income, on taxation of employment income. Not even a single question. Sorry, not even a single exam. Are we together? Can you give me a hands up if you're together? Good, 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 good. That's good stuff. Thank you. All right. Employment income, this one never misses. Okay. These are the things which are taxed under employment income. Salaries, salary, leave pay, sick pay, medical allowance, payment in lieu of leave, fees, commissions, bonus, including gratuity and incentives. You have to master these words because these things come and they confuse you if you're not careful. They come and confuse you, okay? If you're not careful. So, does it look ugly? So, allowances relating to the cost of living, subsistence allowance, housing allowance, entertainment or travel. Others may include any discharge or reimbursement of expenses incurred by an employee here, what you have to be careful about, reimbursement incurred by the employee that is taxable is a reimbursement of expenses incurred in the interest of the employee themselves. If it is reimbursement of expenses, but incurred while exercising the job, while on duty, that one is not taxed. You understand? They are different. Payment to the employee working in exceptional conditions, payment for redundancy or termination, pension payments, other payments made in respect of previous, current, or future employment. Okay. Now, what is exempt from employment, taxation of employment income? Reimbursement of expenses incurred by the employee. If I put fuel in my car to go on the field, I'm a salesperson, and I bring the receipts because I was on the field doing the company work and they refund me money, it is not taxable. Okay. If I go up country and I sleep in a hotel while on duty, let's say ICPA, let me use an example of ICPA. ICPA has a tax center in Musanze, and Gilbert goes there to facilitate examinations, and he spends his money in a hotel there. Once he brings a receipt showing he spent money in a hotel because he slept over to facilitate exams, and ICPA refunds him the money, that money cannot be taxed as part of his salary. Okay? Those are not deductible, would be deductible calculating employees' income. Contributions made by the employer for the employee to a public institution in charge of Social Security, the RSSB, that one is not taxed. If they pay pension to a qualified pension fund, it is not taxed. Employment income received by employees who is not a Rwandan citizen from a foreign government or a non-government organization under an agreement signed by the government of Rwanda when the income is received for the performance of aid services in Rwanda. People who work for foreign countries' embassies, they don't pay tax. Employment income received from an employer who is not a resident in Rwanda by a non-resident individual for the performance of services in Rwanda, unless such services are related to a permanent establishment of the employer in Rwanda. Okay. In the new law, something has changed here. This time it will be 2 years, and after 2 years, no, 5 years, and then you are taxed. But in this current law, if you're not a Rwandan resident, you're working for a non-Rwandan company, and while you're sitting in Rwanda, you are not going to pay tax. Okay? Then we have benefits in kind, and then we dive into the questions. These are the 3 benefits in kind. They are 3. They are 3. Motto, and this motto, it has to be clear. It is a company car. Okay, a fueled company car. A loan. This loan, the benefit in kind is the difference between the real interest the staff pays and the interest, the interbank rate. However, it only applies if the loan is in excess of 3 months' salary for the employee. 3 months. If the loan is below 3 months, it's no problem. Okay? Then house. They consider 20% of employment income, excluding the benefits in kind, if it's a company-owned furnished house. Now, rent of a house or a motor vehicle directly paid by the employer on behalf of the employee is taxed as an allowance and not as a benefit. Basically, let's say me, I work for ICPA, and ICPA rents for me a pickup car from Volkswagen. It's not an ICPA car, so it is not a benefit in kind. But if they spend 1 million francs on it, what they have to do is get that 1 million franc, add it on my taxable income. It won't be part of my net, that should be clear. It is only part of my taxable income because that is considered like an allowance. It's money that, in other words, they can as well give it to me and I go and rent a car myself. But for their reasons, maybe they don't trust or whatever the story is, they pay the owner of the car directly. So it should be considered as an allowance to me, not as a benefit in kind. Difference, Murayumva, can you get the difference between driving a company car and the car renting a car, the company renting a car for you? Is it clear? Do you understand it?
I don't get the point.
Sorry?
I don't get the point.
You don't get the point. Okay. So it's like this. Consider two people, okay? I'm going to open an Excel here. Can you see an empty Excel here?
Yes.
Can you see? You see it?
Yes.
So
Yes.
let's say you have two staff. Let me see who was that? Was it Marisa? Is it you? Okay. Let's say you've got Marisa and you've got me, Francis, and you both work for ICPAR. You have a gross salary of 3 million francs. Me, I have got let's say 2.5. And you're driving, we are both working for ICPAR. And you, Marisa, you've got an ICPAR car, okay? The value by Guze, it was 40M. And me, this is you. And me, they rent a car from VW for Francis at 500 per month. Are you following me? Now, here is the difference. You who is driving an ICPAR car, this car has with fuel. And this is an ICPAR car. This is a car they're renting for me. You're driving an ICPAR car. For you, this is what they will do. It doesn't matter the value of the car. We'll get 10% of your income. This is your benefit in kind. Are you angaha urabisobanukiwe?
Yes.
You're okay here? And for me, the benefit in kind is 0. And then we'll say other allowances. For you is 0, but for me, I'll take the entire amount which they rent the car for me. And our total taxable income now for you, it is this 3 million plus the 10%, because this benefit in kind for the car should be 10%. But this one should be the total amount they rent the car. So my total taxable income for me is going to be 2.5 plus the 500. Have you understood it now better?
Yes, thank you.
All right. Oh, sorry about that. So let me go back to my presentation. Okay. Are we together here? Now, these are the exemptions like we've seen, and this is how you calculate. Now I'm going to practice a question with you. This is an example of a question I picked. There's so many questions all over. I think I picked it from one of the past year exams and wanted us to practice it, okay? All right, let me take you here. You see my screen?
No.
You don't see it.
Mm.
Okay, I'll put it up.
It's a black.
Okay. Come on, guys. I'm here. Yeah. How about now?
It's okay now. Can see.
Okay. So because I didn't want us to spend a lot of time, I've done some things, but I have my way of hiding them. And I just need you to first focus, okay? Right now, let's focus on the question. Okay? Let's focus on the question. Hide this. After completing CPA, Vedast got a good job offer from Vodafone Rwanda as a senior financial controller. Everything is in Rwandan francs. Monthly salary is 3,650. Monthly communication, 250. Monthly overtime allowance, because his job requires extra work most of the time, 125,000. Company car, which he uses for both private and business. He contributes 75,000 per month on workshop costs and assumed extra mileage driven for personal use. So basically, he has a personal car, but because he uses it, he has a company car, sorry. But because he uses it for both business and personal, he contributes some money because of assumed extra mileage for his own stuff, okay? A furnished house, however, because the company houses are under renovation, the company is renting a house for him at 450,000 per month. In the month of July, I got a loan of 6.5 million, an advance on salary from the company at a minimum rate of 5%. But the bank rate, interbank rate is 10%. This guy has employed a babysitter and a chef. The babysitter gets 45,000 per month and the chef gets 55,000. The limit for such benefit for senior staff may not exceed 75,000. Company contributes 75% per month as statutory pension, and he contributes 75,000 by himself. He pays 150,000 per month as payee to RRA. Calculate the taxable income and the tax liability. This question had 15 marks. Okay? Now they're asking for the year, which means we have to do it in the year. Are we together? Can you see my Excel? You raise your hand if you can see my Excel, because now this is practice. Okay, that's good. Now, where do we start? I want to hear your voices. Where do we start when we are computing the income, the tax? We start with the salary, okay? So we start with the basic salary, okay? Which is, we get the 3,650 times 12. You agree with me there?
Yes. Yeah.
Communication, is it an allowance that we should include? Is it a taxable allowance? Monthly communication allowance?
Because it's the cash, you have to include it.
All right. And what we simply do, I hope what I'm trying to do here does not bother you, because I have tried to save our time so we can cover many things. So I spent some time before coming here and put some information together so that you follow and you see what doing. Okay, so I simply get the 250. This is 250 times 12. We're together there? Okay, communication done. Monthly overtime allowance. Is overtime taxable? Is overtime taxable?
Yes, it's taxable.
Yes, overtime is taxable. So overtime is the 125 times 12. Okay. 125,000 times 12 because it's annual. Do we have any other cash benefits here? Because the total salary on which you base benefits in kind is the total cash benefits. Is there any other cash benefit that goes to him directly cash to the salary? So we have our total cash emoluments here. Okay. And this is simply, we add these three. Are we together there?
Yes.
All right, now let us start looking at other benefits in kind. So let's look for the benefits in kind that are applicable here. He gets a company car that he uses for both personal and business activities, but he contributes, okay? He contributes 75,000. What we do here is we shall get the total cash salary and we apply 10%. You remember, there's my friend here, Marisa, when I was showing you the example of you who they are buying a car for and me they are renting a car for, I told you it does not matter the value. Sometimes they will confuse you and tell you one person, there are two people, one is a CEO, drives the V8 worth 100 million. Another one is a finance manager, drives the whatever, a VW Passat, maybe worth 40 million. And then you will think the benefit in kind is different. No, it is 10% of their salary. It does not matter the value of the car or the value of the house. When the value matters is when they are renting it for you. You add the whole rent amount on your benefits. Are we together there? So the car, what we will do with the car is we will have to we have to get this okay, times 10%. However, we have to remember that this guy contributes 75,600 every month because it's annual. And this is our car benefit in kind. Have you seen how I've done it? And I've tried to put the description here so that you can follow what I'm doing.
Oui.
You followed me?
Vous nous avez voté.
Yes.
Okay, I think someone didn't. What's the name? Who is it on the list here? Okay, this is what I've done. Benefit in kind. Okay, let me try. So if is there anyone here who doesn't understand Nyarwanda? This class is in English for record, but it doesn't matter if I have to use Nyarwanda for you to understand properly. This is Rwanda tax law, no offense. Is anybody in this class who doesn't understand Nyarwanda? Can you put up your hand? I want to know if I'm not being inconvenient for anybody. Oh, we have people who don't understand Nyarwanda. All right. Saviti, you don't understand in Rwanda. Okay. So this is what I have done. A benefit in kind. So I'll stick to English, okay? A benefit in kind, a car benefit in kind is when a staff is driving a company-owned car. Now, let's first forget about the employee's contribution. Let's first forget about this. Okay? You have to get the total income times 10%. And that 10% will be added on that total income to tax income, which is higher. Okay? And then, because they have told us this staff contributes 75,600, we have to deduct it from the benefit in kind. All right? We have to deduct it because he contributes. Otherwise, after removing your contribution, it would be the entire amount, only 10% of the 43, and will only do this. It will be 4.8 million. But because he contributes, this is what he gets. This is the benefit in kind. Are you now okay? There's somebody who did not understood. Are you now fine? Is it clear now?
It's fine.
Thank you. What is the other benefit? We have a loan. Okay. Okay, we have a house. Now, this house here, however, because house is under renovation, the company is renting a house for 450,000 a month. Is this a benefit in kind? Is it a benefit in kind for the house? Should we do 20% of salary? Who can tell me, is this a benefit in kind?
Yes, it's a benefit in kind.
Why? Why do you think so? Fred, why do you think so?
I think it's because it's a what can I say it?
So this is the thing. If the staff was living I had to mute someone. There's background noise. If the staff was living in this house, in the company house, it would be a benefit in kind. But remember, they said the houses are under renovation. These are the tricks they bring in an exam for you. They said the house is under renovation. So the company is renting a house at 450,000. This is not a benefit in kind because the company is renting. This is what I said. Remember the Calito Excel? It's a benefit. You remember here, there's something I did here. Here they were renting a car. I did not put it under benefit in kind as other allowances. Okay? So it is not a benefit in kind because they say the house is under renovation. Maybe the next month in a practical way, not in an exam. This is one thing in an exam, gone. This is not a benefit in kind. They're renting. We shall add it its full amount, but we are not putting it under benefits in kind. Okay? So we're not putting a house under benefit in kind. So we first leave the house, we finish benefit in kind, then we come to the other benefits. And then there's a loan of 650,000, 6.5 million, took a loan on salary from the company at 5%. Now, condition number one, if the loan is higher than, the loan has to be higher than the salary, 3 months if you look at this loan, yeah, if you take this loan, if you take the salary, even if you take the 3,650 times 3, you're going to get 10 millions. Okay. You're going to get 10 millions. So which means this is not applicable. So it is 0. Have you understood why I've said it is 0? There is no benefit in kind on loan because the loan is lower. This symbol here is simply a mathematical symbol, which means lower than. It is lower than 3 months salary. If it was higher than 3 months salary, we would get the difference between the interbank rate of 10% minus the 5%, and we apply it on this loan, and we put it on a month. Assuming the loan was something like, let's say, the loan was like 20 millions, we would get the difference between 10% minus the 5%, okay? Which is 5%. So we basically would get the 20 millions times the difference between 10% minus 5%. This is the interest. And I would put it on my, yeah, this is the annual interest. And I would look at when they got the loan. Okay. And they got the loan when? July. That means it is only 6 months. So I divide by 12, I multiply by 6. I would have 500,000 as the benefit in kind. Understood? You understand what I'm doing? Do you all understand why it is not a benefit in, there's no benefit in kind on this loan? Can you put up your hand so that I know you are convinced? All right. Now, during, sorry?
I have other questions about those transactions
The house?
on the loan.
The loan?
Yeah. When the loan, if they get the loan greater than 3 times the basic salary,
Yeah.
and you want to calculate, you
Sorry,
deduct.
I didn't hear. Can you say it again?
You understand me?
Now I hear you. Go ahead, speak.
My question is this.
Mhm.
Suppose this received the loan greater than 3 times next basic salary.
Mhm.
When you go to calculate the interest or the taxable amount,
Mm.
you get the total amount of loan getting, or you deduct the 3 months basic salary.
Okay.
You
Now,
deduct the exempted amount, or you calculate the loan can get.
now I will answer you by first showing you this. I want you to first look at this. Do you see what this here says? It says a rate, and it says here that if the loan, including advance on salary, exceeds 3 months salary given on the employee, you see that's where the law stops. Now, this has been a controversy across so many classes, whether you deduct the advance, the 3 month salary, and you apply the benefit on the excess, or whether you use it at all. And now this is me, what I can tell you. You can meet 2 different people and they give you a different story.
Yeah.
And both of them, they will be right depending on how they interpret the law. As the laws go evolving, they start fine-tuning certain things. The statement in the law is not giving enough explanation, but here is my understanding. This is what I know. The reason why they call it a benefit in kind is because you should have gone to the bank and get that loan at a higher interest. Sivyo? Now you get it from the company at a lower interest, sometimes free, no interest, which means the government wants you to pay the difference on the benefit on the loan, but they give you an opportunity that if you can get the loan which is not higher than 3 times your salary, it is okay. Now, this is my conclusion. For me, what I do, if the loan is higher than 3 months salary, I apply the benefit on all the loan, not the difference. The reason I do that is not because the law says that precisely, the law is silent. It is because the reason they mention 3 months salary is just like, you know how the income tax, they don't tax 30,000, all right? They just leave it for you. It's like for low income earners, okay? However, they tax you for getting the loan at lower interest, which means, in my view, you will pay the benefit in kind on the loan you get, as long as that loan is higher than your 3 month salary. So, to answer your question, if I set the exam, I'll do it like that. And if I mark the exam, I'll give you the marks. But I know the law is vague there. So if any student brings it like by removing the 3 month salary, if I'm the one marking, I would still consider them because of the law problem. But I appreciate that you also understand that concept. I hope I've helped you somehow. Have I?
Thank you.
Okay. Now, there's no other benefit in kind here. So this is our total benefits in kind. Okay. This is our total okay, other allowances. Other allowances, which other allowances do we have? We have the house rent.
Excuse me, sir.
Yes.
So, hello, let me ask my question in Kinyarwanda.
No problem.
Aramutse afashe loan mu gihe wenda cy'ukwezi kumwe, tugendeye ku iryo tegeko rivuga, hari aho bamwe batubwira yuko atangira kuba wakarikiretinga taxable amount igihe iyo loan irengeje amezi 3. Nibaza aramutse afashe iyo loan akaba azayishyura mu gihe kiri munsi y'ayo mezi 3, what can we do? Suppose dukije umuntu yabigenza gute?
So afashe loan ya miliyoni 20 ahembwa miliyoni 5 ariko azayishyura mu mezi 2.
Yego.
Okay, this is what I would do. Muri ayo mezi 2 mu gihe atarayishyura, I would apply the benefit in kind. Kuko benefit in kind, calculating benefit in kind is simple. If the loan is 20 millions and they have given it to you, the company rate is at 5%. The Benel interbank rate is at 10 and maybe 12%. Okay. Then the benefit, which is the difference, is this 12 minus 5. So the benefit in kind per month, I get this 20 millions times this 7%. This is the benefit for a whole year, and I put it on month. This is your benefit per month. So in the first month, I'll put this benefit in kind on the taxable income. In the second month, I will put it as well. In the third month, if you have paid, I will not put it. Is that clear? Are you answered? Hello? Are you answered? Huh? So I don't know if you were answered, okay? Okay, so I'm just looking for those people who don't have the right to speak. So I give them the right so that everybody can have a right to ask questions. Okay. There's someone who was asking me, have I answered you? Can you tell me if I've answered you?
nasubijwe connection yari ntengushye yarivuyeho.
Okay, no problem. Thank you. Sawa. Now, what is the other benefit in kind do we have here? Loan twairangije, we're done. And then there is the babysitter and the chef. The babysitter gets a salary of 45,000. The chef gets 55,000. The limit is 75,000. Okay. Now, this one here, okay? I've put a working here down here. Okay. I've put a working here. The babysitter salary is 45,000. The chef salary, I hope you're following me. You are on my screen here. The chef salary is 55. But the limit for this benefit is 75,000. We cannot exceed the limit. They show you the staff pays 100,000 on babysitter and chef, but the company has only allocated 75,000. So what we shall consider is only the 75,000 times 12. And you have your working here. Okay? So this is say my, just make it my workings 2. Okay? This is my workings 2. Is there any other benefit? So this is my total allowances. Huh?
Question.
Yes.
On house rent, isn't it included in cash benefit?
Yeah, we house rent actually in cash, but house rent is here. It's not cash benefit. Why are you saying it's cash benefit?
Because in notes of Wikipedia, they mentioned that if they pay the rent for employee, it is included in cash benefit.
So this is how there are 2 types of like 3 types. These benefits here, the communication, monthly allowance, they are benefits which are part of the salary. Okay, but here they don't pay the employee, they pay the rent, they pay somebody else. Okay, it does not go in the employee's account. I don't know if you're getting it. The total cash emoluments, you look at those benefits which go directly on the employee's account. The rent does not go on the employee's account. The house workers' money also goes directly to the account. If they tell you this money goes on their salary, it goes on the account, you include it under cash benefits. But then these other benefits is now where, if you know they are renting a car for you, they're renting a house for you, they are paying TV subscription for you, they are paying your home utilities, they are paying your security. There are some people like he's a CEO and maybe he's living in Vision City. Bamukodeshereza imodoka, bamwishyurira amashanyarazi, bamwishyurira DSTV, bamwishyurira internet, everything at home. But they pay them directly. They pay directly. However, there are those you find that they have calculated the money and they are adding it on your salary. If it is part of your monthly salary, it comes into up here, total cash emoluments. You get the difference? But for me, the most important thing is to understand what is taxable and what is not taxable. Okay?
Okay, sir, I got it.
All right. Thank you very much. So this is our total taxable income. So this is our, actually I should say total taxable income. This is our total taxable income. It's here, okay? Now, what else do we do? Do we have to reduce it? They say loan done, babysitter stories done, contribute 75,000 to pension, and the CPA Bazimia contributes 75,000 by himself. What does the law say? You remember a law which talks about pension? So this is your workings 3. Now, pension, let me refresh your memory here. We're back here. Exemptions. Exemptions from payee. Pension has a limit of 1.2 million, okay, somewhere. So what we do is the actual money paid is 75,000. Remember, what the employee pays by himself is not our problem. The concern is the money paid by the company. If the company contributes 75,000 to an approved statutory pension, it is not taxed. However, the statutory limit, I see hands raising. Are there some questions? Or you're just telling me you're good? Okay, no questions. Please interrupt me, okay? However, the limit is 1.2 million. So what are we supposed to do? If the contribution exceeds 1.2 million, we only exempt up until 1.2 million. But if the contribution made by the company to pension is less than 1.2 million, we exempt the actual paid. So in this case, we are going to exempt only what was paid. This one here. So we're going to exempt this 75,000 times 12. Okay. Or I could make it positive and I just say I get this minus this. Okay. Are you following me? You see why I deducted this? Do you understand why I deducted this?
Not yet, sir. Can come again. Not yet. They're not getting it well.
But you see my screen, eh? You see my screen?
Yes.
Okay. So the law allows us that if the company contributes to pension, a qualified pension, on behalf of the employee, up to 100.2 million francs. Okay, 1.2 million francs. It is exempt. Does not pay tax. Let's say there is a pension scheme where the company contributes money. That money the company contributes should be deducted from the taxable income. That money should not be taxed. Understood? So what we do, we deduct it. However, there is a limit we have. The limit is 1.2 million francs. If this payment, if the contribution exceeds 1.2 million francs, they exempt only 1.2 million francs. If it doesn't, they exempt the actual amount. So in this case, we exempt only 900,000 because that is what the company contributes. What the employee contributes for themselves is not our concern in this case, because it is exempt anyway. Okay?
Question.
Yes?
This is statutory limit of 1.2 million. is related to the contribution of employer to his employee or is a contribution of employee himself?
We deduct the contribution by the employer.
How can you compare this with the 5.3%?
How do we what?
Compare this 1.2M
Mhm.
with the percentage of 5.3 on the, I think, cash allowance.
Oh, the 5.3, the one that goes to RSSB. No, that one is part of the statutory deduction. That one is a must. Okay. However, there are companies who, you see, like Sonarwa and other insurance, they have those pension schemes where the company contributes like some 7.5% of the salary to that scheme. Okay. So if the company contributes to a statutory scheme, pension scheme, it is not like mandatory. Some companies contribute, some others don't contribute. The company contribution is exempted from being taxed up to 1.2 million francs per year.
Okay.
The one for RSSB, that one is obvious. That one is as good as payee. On all your salary is applied, apart from, there's only one thing which is exempt for that. I think it is transport allowance. Yeah. Okay. And then this guy pays payee of 150,000. You know, contribution made by himself is okay. The real point of the contribution made by the company. Okay. So I want you in your free time to calculate the tax. That's why I put this question here for you. I want you to calculate the tax. And it's very simple. You apply the annual tax brackets and you calculate the payee and you're done.
Question.
Yeah. Go ahead, sir. I'm listening.
When the company contribute amount greater than the contribution limit, do we add the contribution which is greater on the contribution limit?
We only exempt up to the limit.
Arengaho
1.2 million francs. Arengaho is taxed very much. That's what it means. If the contribution here was 2 millions, we only, remember, do you see the impact? You were supposed to have been taxed on 58 million, now it is 57. Seriously. If this contribution was 2 millions, we only deduct 1.2 million because that is the limit. The reason we use 900 because it is lower than the limit. Seriously, you understand? The company can contribute for you as much money as they want. They can contribute $1 million per month, which means it's 12 millions in a year. But the law allows them to not pay payee only on up to 1.2 millions. If the annual contribution is 1.2 millions and below, you deduct the actual. That is what we have done. But if the annual contribution is higher than 1.2 million, you deduct only 1.2 million. Have I answered you now?
Ikwibaza asigara ari remaining tuyateranya nayo tukayataxinga.
Sorry?
Ikwibaza iyo
remaining. It's like this. The whole point here is that the government is encouraging companies to contribute for people in pension. So when they contribute for you up to 1.2 millions, it reduces your taxable income. When they contribute more, it has no effect on your taxable income. The problem is not wanting to increase the taxable income. The benefit is to reduce taxable income. The loss of the benefit is having no effect on taxable income, which effectively means if the benefit is more than the statutory limit, you only benefit from this up to 1.2 million. Does that make sense?
Yes.
Okay. I'm now back on my presentation. Can you see it? Can you see my PowerPoint? You give me a hands up if you can see.
Yes, we can see.
Thank you. So I've got a second question here. Okay. Of this farming company. So what I've done also, in the interest of time, I've brought it here. Okay. I'll just, you know, just try hide this for now. Okay. So this company, can you see my Excel now? This company, they grow fruits crops in Rwanda. The annual turnover is 380 million. The company requires 2 new employees, 1 permanent salesperson and 1 casual employee. Okay. The permanent person will receive the following. First, put this away. Salary of 22.2 million per year. Performance-related cash bonus of 5% of annual salary payable in March each year, depending on the achievement of sales targets. I want you to read this properly. The bonus is paid on a 5% of annual salary, payable in March each year, depending on the achievement of the targets. They lease a company a car of 2.4 million per year for the permanent employee. A loan of 21 million to be paid in 5 years' time on the cessation of the employment. They will charge the employee interest on the loan of 2%. However, the National Bank of Rwanda is currently lending money to commercial bank at a rate of 6%. The second employee is employed for 3 weeks in March to assist with harvesting of fruits. This will not use special skills, equipment, nor will they require any special skills. The employee will be paid in cash, a sum of 80,000 per week. They will also be paid a travel allowance of 15,000 per week to assist with the cost of traveling from their home to the farm, which is in a remote location. They want you to calculate the payee that this company has to pay in respect of the 2 employees for the month of March. Assume that the salesperson annual targets were met. Explain the rate of payee applicable to the second employee, and explain the obligation of this company in regard to filing the income tax. See, now this question has like, this question can have up to between 10 and 15 marks. And it would be easy to get as many marks on that question as possible, won't it? Wouldn't it be easy? Okay. So where do we start? All right. So where do we start? We start with the first employee. We start with employee 1. We are looking at only a month. So the annual salary is the 200,000 I divide by 12 to get my monthly salary. Okay. Now the performance bonus, how do we calculate the performance bonus? Because they said this person achieved the target. They said it at the bottom. How do we calculate the performance bonus? Because you know it is taxed. That one I don't have to remember to repeat. It is taxed for sure. How do we calculate the performance bonus? Who can tell us how we calculate the performance bonus? Who wants to try? How do you calculate the performance bonus? Who wants to try? How do we calculate the performance bonus? Hmm? Okay, so this is how we calculate the performance bonus. Okay, it is a once-off. It is 5% of annual salary. So all I do is the 22,500,000 times 5%. It is paid once. Wait, you get me? It is paid once. Okay, it's paid once. What else? We have the loan benefit in kind. Okay, and I've put up some workings for you down here to follow. Now, the loan benefits in kind. So what we do is we have our interbank rate, 6%. The actual rate is 2%. The difference is 4%. The loan is 21 million. Silvio? Are you following me, my friends?
Yes.
The loan is 21 million. The benefit is 21 million, this 21 million times the difference in the interest rate. This is the benefit for a whole year. But here I want a benefit for the month. So I simply get this, I divide by 12. Now, where you had asked me the question was whether we have to first remove the 3-month salary. That is a part of this law which is silent. No matter which explanation anybody can give you, the law is silent here. And until the law is clear, different people can use 2 different approaches. But for me, what is the most important? The most important is, do you understand the concept of the benefit in kind? You know that the first test you have to do, your salary, that loan has to be greater than 3 months salary. And here I didn't waste a lot of time because I can simply know the month salary is this 1.8 here times 3. It is 5.5 million. The loan is 21 million. It is definitely bigger. Number 2, you have to get the difference between the interbank rate and the actual rate on the loan. If the loan is given free of interest, at 0 interest, you get that interbank rate minus 0. So the entire loan rate is at whatever. It is the benefit. So this is our benefit in kind. Are we together on this point? Okay.
Yes, we are together.
Is there any other benefit? A company leased by this at a cost of 2.4 million francs per year. Okay. So this is our other benefits. Other benefits, current. Okay. Current, which is, so I can say other benefits, and I just do this, which is the 2.4 M, I divide by 12. I take all of it, 2, 4, I divide by 12. So this is my total taxable income, okay? Total taxable income. This is my total taxable income. Okay. This is my total taxable income. Now, you understand understand where I'm getting my total taxable income? Let me first hide this. You understand where I'm getting my total taxable income? Hmm? Do you understand where I'm getting my total taxable income? I got my initial basic salary plus the performance bonus plus the car benefit, loan benefit in kind, plus other benefits. This is total income. Then I compute my payee. From 0 to 30,000, I see 30,000 minus 0, I apply 0%. 0. 30 to 100,000, I simply say 100 minus 30. Of course, if you're writing on paper, it won't be as flowing as this. Minus 30,000 times 20%. Are you aware in the new law, they have changed it? It is now up to 60,000 that is exempt. And here above, I'll just get this amount minus 100,000 times 30%. This is my total pay as you earn.
Questions? I
Sorry?
have a question.
Yeah.
So how did you compare that loan of 21 million with that monthly salary of 1,850,000, and you multiplied it by 3 and you compared it by that loan of, I think that loan is 21 million per year. How I didn't get it, how you compared it with taking that basic salary and multiplying it by 3.
No, but let me first correct you. The loan is not 21 million per year. 21 million is the total loan amount. Is that now clear? This loan is the total loan amount, which is payable in 5 years or at cessation of employment. Basically, if in 5 years, if the employee is still with the company, you have cleared the loan. But if he decides to leave in 2 years, he pays up to the last day he leaves. So the loan, you compare the loan amount. And how I compared, I didn't show the working, but I did it actually here for you. I don't know what, I think you were not following. What I did, I said, let me just compare. I took this amount times 3. It is 5.5. So it is clear the loan amount is higher than 3 months salary. Then the benefit in kind applies. That's all I did. 21 million is not the amount paid in a year. No. 21 million is the loan amount. And for you, the loan amount to qualify as a benefit in kind, it has to be exceeding 3 months salary. I don't know if now you're following.
I'm okay with it.
Now is okay. Is it okay now?
Yes, sir.
Thank you. So employee number 1 is here. Let's go to employee number 2. Employee number 2, how do we treat the employee number 2? Is a casual. How do we tax casuals? Employee number 2, how do we deal with employee number 2? So employee number 2 is, the cash payment is 80,000 per week, but you worked for 3 weeks. And travel allowance is 15,000 up to this amount. But remember here, okay? Remember here, this is not the first employer. You know, there's what we call first and second employer. First employer is how we tax like this here. Second employer, we only tax 30,000, 30% flat, but we exempt the first 30,000. So for the second employer, for the second employee, the 30,000 is 0, and then whatever is in excess of 30,000, we tax at 76,500. Okay, because it's the second employer. And here they also ask us the application of the second employee and obligations in regard to the filing of tax. The application is that the law requires that if the company paying company is a second employer, it is payee is applied at 30% flat. But if it's the first employer, is applied like this in these tax brackets. Okay. But if is a second employer, is applied at this. Now, let me give you where I found in this question where there's something interesting. Somebody else can decide to do withholding tax on this. I think it would still be okay. If you consider this like to be a once-off payment to a somebody you don't have a contract with. But the only problem, if you read here, the second employee, the moment you call it employee, do you hear me? The moment you call this person employee, it is better to account for payee. But because you're not the principal employer, you consider that payee at 30% flat. However, if the person is like a once-off consultant, okay, who comes once, does the job, walks away, you can do a 15% withholding tax. You get the difference when you apply withholding tax for 15% when you're paying to non-residents or not people with not tax team, and when you apply the payee. If me, Francis, I come, I do for you some work quickly. Once off I go, you can do withholding tax. But if you give me a contract to be coming for 2 days in a week or 2 weeks in a month, it is no longer once off. I'm your employee, but you're just not my principal employer. So it is a payee, but in this case, it is a flat 30%. It does not go in these usual brackets. Do you understand?
Yes.
Okay. Now I can go back to my presentation. So this is what I have. I have picked a number of good questions from different past paper examinations. And by the way, the reason I did not pick from the recent exams, do you know why? Because recent exams have proper proposed answers, which makes your life much easier. You know where to find them? Do you see do you see where I am now on ICPA website? Do you see where I am? You should be seeing it now, huh? Do you see where I am now on ICPA website?
Oh, yes, you can see.
Now, you simply come here to students, okay? Okay, this thing keeps coming, it's too much. To students here, and you come to, where is it? Past paper, exam past papers. Okay, you come to exam past papers. They are all here, but starting from, oh God, from around here, most all these exams, they have questions and answers. So for instance, if you come here in April 2022, you will be able to come here and select which paper you want. You'll be able to come here in CPA, you find taxation question paper and taxation answers, and you open it and you revise. You're all able to go there and find those revisions, aren't you?
Yes.
Now, I focused on those that don't even have the marking schemes, because the ones which have revision answer, whatever proposed answer, I expect you to go there yourself and revise. And by the way, taxation is limited, all right? The law comes from here to here. There are no new things. It's just a creative examiner who is going to trick things around, but is always going to ask the same stories. If it is taxation on employment income, it's always going to rotate around overtime, benefit in kind, renting a house, and whatever. It's all going to be the same. When we go to corporate taxation, it's going to be the same. Today, I want to cover with you this. We cover rental income, we cover withholding tax, and make a small introduction on corporate tax. Next time, we'll cover corporate tax. We'll cover those the accelerated depreciation. We'll cover VAT and tax procedures. Then I'll tell you, go and pass. Tell me something. Are you liking this session, or am I boring you? Please tell me so I know how to make adjustments. Is this session helping, or I need to make some improvements? You just tell me what I'm not doing right.
It's helping so much.
Thank you. That's good. That's good for me to hear. All right. Now, I'm going to look for this paper, and we see this question. This is question 2, and this is question 6. Let me look for December 2018, question 6. So I had tried to download them, December 2018, question 6. December 2018, question 6, question 6, question 6, question 6, question 6. Okay, this is on rental income. We haven't got there yet. Let me see, 2019, December, question 2. December 2019, question 2. 2019, question 2. Okay. So here, can you see this question? This is an exam question. I didn't come up with it. I didn't set this exam. Okay. You tell me if you can see it. Can you see it?
Yes, we can see.
So this guy, Manishimia, qualified as an accountant, Virunga and Ecosystems Limited as a chief finance officer. They pay Manishimia 2.5 million basic salary. He receives this money for occupation hazard, living allowance, what. So all these benefits, a car, Okay. Now, they want you to compute taxable income and define 4 employment incomes exempted from income tax and explain the term resident taxpayer in Rwanda. Listen, my friends, if this question comes, can't you get at least 15 out of 20? A question like this, why wouldn't you get 15 out of 20? Now, I'm going to put it in an Excel file and we start doing it. Are you okay with that? Okay. So I'll just call it December 2019, question 6. Okay. Yes, it is. So I'll come here. I'll be doing this, copy, paste here, then come down here. It's a long question, isn't it? All the way. Come here. Okay. So it was B3. Then finally, get this. Okay. Yeah, this one as well. So it's quite long, but we will do it. So we start quickly, okay? We just use the same format here like we are using. On this one, it's much more similar to this. Description. Is it annual or it is monthly? Oh, good. They want us to calculate for the year, okay? So it is annual. Okay. Ready? Guys ready?
Yes, we are ready.
Thank you. So basic salary is how much? 2,500,000 times 12. Okay. It's 2,500,000. So it is 30 millions. How to recognize? That one is ticked.
Yeah.
Allowance of 200,000 for occupation hazard. Other employees are not entitled to this. So they get. So let me just put this at 12 because now it looks right here. Okay. And here. Okie dokie. So we say occupational hazard allowance. It is 200 times 12. Clear? Living allowance equivalent to a quarter of his basic salary. The management of Virunga decided that this allowance that was entitled to managing is banned as it was contrary to the financial manual of the company. The decision was taken and put in practice from 1st of November. That means this guy was getting this allowance from the start of the year up until October. Did you the tricks? So we are going to apply this benefit only for 10 months. You agree with me?
Yes.
So living allowance, we are applying only 10 months. Okay? And how do I calculate it? Oh, one thing I forgot. I want you to understand this properly. Let me put for you here, calculation. Okay? Where I'll say it is the 2.5 M times 12. Okay? And this one, will this help you in your revision?
It will help us.
Times 12. Okay, you see, I want you to pass. Now, this living allowance, it is a quarter. A quarter of the basic salary. So it is a quarter of the basic salary. The basic salary is 2.5 million. Okay? Times 10 months. You see what I've done? You understand? It's a quarter. So we have to say, we get it as a quarter of the basic salary. So we say the basic salary which is 2,500 divided by 4 times 10 months. Okay? Okay. Living allowance done. Manishimi has 2 children, a girl and a boy. Company pays school fees on behalf of Manishimi, the student. So it looks like there are no other cash benefits. Huh? There are no other cash benefits. There are no other cash benefits. There are no other cash benefits. There's a monthly communication allowance. There's a monthly communication allowance. Monthly communication allowance. So we say communication allowance. It's monthly. So the monthly communication allowance, where is it? 100,000. So it's 100,000 times 12. I'm just using the word K to represent 1,000, okay? Is there any other cash benefit? I'm trying to finish all the cash benefits. The car, the house, all these are benefits in kind, okay? Monthly cash with company contributes statutory pension. This one we shall deal with it. Personal contribution, not a problem. A reimbursement incurred. He was in business activities in Western region. Is this taxable? Point number IX, which means 9. This is Roman numerals. Is this taxable? It was a reimbursement while he was in Western province, in the Western region. It is not taxable because it is reimbursement of expenses incurred while on duty. Sergio? Okay. Muka Mniza, a wife to Manishimwe during the year, organized the party. This is also another benefit which will be taxed. The provided air ticket for Christmas holiday, this is taxed. Okay, so these are my total cash emoluments. I add them up all. Okay. Now, let me add my benefits in kind. We add benefits in kind. Okay. Benefits, we add our benefits in kind. We have car. How do we calculate? It's 10% of total cash emoluments. Okay, 10% of total cash emoluments. So it's going to be, because they said he has a company car, let me confirm here. A car which he uses for both private and personal business. So we'll get 10% of this. You agree with me? And house benefit in kind is 20%. So it is 20% times that. Are we together?
Yes, we are together.
So we have our total benefits in kind. And all these things I'm doing, you don't have to add like I'm adding. I'm just trying to make sure my work is clean. I just like clean work. But you can add at once. So we can say other taxable benefits or other taxable allowances. Okay, and we just simply say we add them. What do we have? Number This one is done. Okay. Oh, no. Hold on. This one is done. This one is done. Children, school, they pay school fees. One student is 200,000 per term. The other is 100,000 per month. The company transfers money to the school account. The academic calendar has 3 terms. So, school fees for, you agree that school fees is taxable benefit? Murabyemera?
Yeah, turabyemera.
Thank you. School fees. So this one is for girl child. Kuko baratandukanye. They pay. Okay. They didn't even specify. School fees. We can say child 1. Child 1, they pay 200,000 per term. So it's 200K times 3 terms. So we say 200 times 3. So child 2, it's 100,000 per month. So it's 100,000 times 12. So it's 100 times 12. Remember, don't be so confused with this story of school fees. For those of you who have kids who go to school, there are some schools which give you a monthly payment plan. And you just pay amount per month from January to December. So one child has that payment plan, the other child pays per term. That should not be a problem. Okay, in case it is confusing you in any way. Okay. What else? That was number loan done, vehicle done, house done. Number 7, monthly contribution communication done. Contribute 350 statutory pension. Sorry?
I've not yet done loan.
Didn't do loan. Oh God, thank you. That was a mistake. We're supposed to have done benefit in kind of loan. Okay. Let's see the loan. The loan is 4 million. The amount received on 1st June and will be paid within 1 year at the interest of 5%. The interbank rate is 18. The loan is 4 million. What is the monthly salary? 2.5 million. So the loan, let's do the workings here. Okay. Workings on loan. Loan amount is 4 million. Month salary times 3. 2 times 3. Okay. So the loan does not exceed 3 months salary. So we can just call it working 1. So it is good to show that there's a reason you didn't include loan. So you see, this is my workings. So we say not applicable because does not exceed, because it's less than 3 months salary. Okay. See, workings 1. See what I've done here. Eh? This you can get marks for it because you have. Sorry?
Question. Kuri
Yes.
loan twari tuzi ko amezi 3 tuyareba kuri salary advance gusa. Loan tukayikubaho iriya difference in rates tudakuyemo salary advance. Tudakuyemo salary y'amezi 3.
No, ariko condition nuko iyo loan igomba kuba irengeje salary y'amezi 3 to begin with. Maybe you're not getting my point. How do you differentiate between a loan and salary advance? You know, your company go hire a loan, bashobora kwita advance on salary. Even the bank can give you a loan and they call it advance on salary. The bottom line of calling it advance on salary is just a name. It is a loan, my friend. Whether it's a loan for building a house, whether it is a loan on your salary, whether it is a mortgage, it is a loan. The reason they call it advance on salary is because you will pay it with your salary. But they say the company gave you a loan. It is not different from saying the company gave you an advance on salary. The advance on salary normally comes at no interest. That's the difference. It comes at no interest. When they call it a loan, they normally attach a small interest amount. Okay? But it is the same. The point you check is, does the loan exceed 3 months' salary? Okay? Does the loan exceed 3 months' salary? That's what you check. I don't know if you've been answered.
Ntekereza ko ikibazo yaragize ni uko twari twasobanuriwe ko ureba niba loni iriya 3 months yari twaba yikonsideringaga nk'igihe umuntu agomba kuba yamaze kurikavaringa kwishyura iyo loni yafashe. Ubwo niko twari twasobanuriwe itegeko. Niyo mpamvu wumvise twese twagezemo confusion y'uburyo tubara ariya mezi atatu.
Aiko amezi atatu, let's just look at you know, it's always good ikatwifaringa ku itegeko. Okay? Because the law, we interpret it tulisoma ubwacu turebe icyo rivuga. Let me look for it. I can call it just ikatureba hano icyo itegeko rivuga. There shall be added to the taxable income, okay, on a loan including advances on a salary. On a loan including advances on salary exceeding 3 months' salary given to an employee, valued at a difference between the interest on the loan which would have been paid by the employee during the month which the loan was received, calculated at the rate of interest offered to commercial bank by the central bank and the actual interest.
Yes.
So uraona, they say you will be add to the taxable income the benefit on a loan including advance on salary exceeding 3 months' salary. Now, if you read here, and this is where the confusion comes, and I tried to make my point clear at the start. I told you the law does not specify. If you read this, on a loan, salary exceeding 3 months' salary, does it say a loan, but the 3 months' salary is not considered? Or it says a loan which exceeds 3 months' salary?
It's clear. Thank you so much.
So I think for me, the problem is, and this will happen always. I don't want you to be surprised or confused. I want you to reason this tax. And also know that even us, the people who teach it, we interpret it. If I call the Commissioner General of Rwanda Revenue and you challenge him on this point, he might also say, something is missing. That's what the law means. Nimube confused ngo umuntu umwe yababwiye iki undi yabayobeje. No, don't be like that. I always teach tax students and somebody will tell me, "Je bambwiye ko rental income ari 10%." Ubwo ngubu yumbwiye sibyo nambwiye, "Hey, relax. Ninde wakubwiye? Wabisomye mu itegeko hanyuma ukavuga ngo ndakubeshye." So, for me, what I try to follow is the law says if the loan exceeds 3 months' salary, it becomes there is a benefit in kind. Now, it does not be clear whether when you're calculating the benefit in kind, you remove the 3 months salary. No, the law does not do that. So for me, I decide to leave it. However, I have to be honest with you. The examiner can set a question, kwera settings after understanding here wavugaga, akabari kwa kora marking guide. ICPAR, when they are marking, they know the different interpretations in a law. They know what to do. They will give you the marks. That's what I think. So I hope now we are on the same page, are we? Are we on the same page, my friend?
Yes.
Thank you. Thank you. All right. School fees done. What else? House, whatever, communication kwa irangije. Ayoba mkorera contribution, I mark this number, turaza kuyakura muri, yeah? We shall reduce it on the taxable income, okay? You remember the story. If the company contributes to a qualified pension scheme, we remove it up to 1.2 million maximum, okay? This reimbursement is not taxable. This, the wife of the boss organized a party. The company contributed 200,000. The amount was paid to the hotel. 200,000 is a benefit, okay? What was it called? Was it Christmas or house party? What did they say? Birthday party contribution. They contributed 200,000. So it's only 200,000. It was a once-off. Sibyo? Don't make a mistake of multiplying it by 12. You know, I need you to be very careful. Don't rush. They put a lot of tricks. It was a one party, happened once. You cannot multiply it. Sibyo? And then this one is done. During the company provided air ticket amounting 200,000 to Manishima for Christmas holiday. Oh, definitely, that is a benefit in that 1 month. Air ticket for Christmas holiday. It is how much? 300,000. Okay. So we have our total. Other benefits or allowances. So we have our total. So we have also to subtract company pension contribution. And we can put some workings here. Okay, we can say our working 3, which is for pension. So we say company contribution. The company contribution is what? The company contributes how much? 300,000. Okay, this one, the guy contributes himself is not our problem. So the company contributes 300,000 per month times 12. Okay, it comes here. And then we have statutory limit 1 to 100,000. Okay. So this is our statutory limit. So we can only, so we say this is our C working 2. I should call this 2. This is our statutory This is our working for this stuff. So we can only consider 1.2 million. Do you understand this? 1.2. There's somebody who had a question for me, was asking what if it is more? If it is more, you only consider up to the limit. So our net taxable income is, we start up here, we add the benefits in kind, we add other allowances, and we subtract. So this is our total taxable income. Are we clear? Are you following me?
Yes, we are together.
Thank you. Okay, now we can calculate our payee. How do we calculate annual? Who can tell me? The first one is from 0 to what? Who can tell me? How do we calculate payee?
360,000. 0 to 360,000.
0 to 360,000. We tax it at
0%.
We tax it at 0%.
Right.
And then 360,001 up to
1.2.
1.2 millions, we tax it at 20%. And then above 1.2 millions, we tax it at 30%. Everybody understands this? I'll be so disappointed if you guys don't understand this. So in our calculations, we say 30,000 minus 0 times 0%. So what do we get? 0. And then here we'll say 360,000 minus, no, say 1 minus 360 times 20%. Okay, it's 20%. So we say 1,200 minus 360 times 20%. Okay, and then the last one here, we get the actual salary, 52,905 minus the 1,200 times 30%. So we simply say this one here minus 1,200 times 30%. So our total payee is this. Okay. Okay. This is the total payee. What was the question? The question was asking us to calculate the income tax payable. Explain for employment incomes exempted. These ones, we have looked at them, right? Haven't you looked at them? We have looked at them. And explain the term resident taxpayer in Rwanda. We also saw that. Okay. So are we clear here? And this question, you have your 20 marks. 20 marks. Why wouldn't you pass this question? And by the way, when they are marking taxation, they don't mark the final answer only. They are testing the knowledge. That's why I always tell you, do not spend time worrying about the small interpretation differences you get from different people. None of the people who teach you taxation, including myself, set this tax law. We get it from the government and we use our knowledge to interpret it and apply it. Okay? I want you to understand the law, own it, and know how it is applied. They will mark step by step. If you get something wrong, it doesn't mean it's game over. They will mark step by step. You try to get the specific points correct, step by step. All right? Are you following me? Now, I had wanted to do all these questions, these papers with you, but it won't be enough time. At least next time, if we try to run so quickly, I can go through them. But for now, I want to take you to another. These are the two questions I want to do with you on salaries, employment income. Can you allow me to go on another topic? Is there any other question you think can beat you on employment income? You know how to calculate benefits in kind. You know how to calculate the other benefits. You know what is taxable, what is not taxable. You know how to calculate the taxes, be it monthly, be it annual. Are you comfortable? Can you raise your hands and tell me you are comfortable with questions on rent, on employment income? 3 people comfortable? Okay. And then what I want you to do, go to the past paper exams and look at questions on employment income and revise them. Would you find a topic in me, revise it from A to Z and make sure you are very super well prepared. All right. Can I go on another? Oh, I remembered we are always supposed to have a comfort break. I want you to advise me. Can I give you a comfort break? You stretch, you take some tea, you ease yourself, and we come back, or you want me to go on? I need you to tell me.
Continue.
Sorry?
We have,
Better to
for me,
continue.
Ntabwo mbumvise. Okay.
kuri njyewe twakomeza.
Okay, kuri Fred twakomeza. Undi ninde uvuga icyo bivuga?
Nanjye twakomeza ibyo nasabaga.
Okay. Hari undi utekereza ko twagira break? Okay, I will go with democracy. Okay, I'll go with the guys who want us to carry on. Thank you. All right, now I want to introduce you to another important concept, which is on investment income. And like how my heading says, it says, how prepared are you? This one comes almost every time. Investment income comes. Investment income comes, okay? And here we'll start on rental income tax, and then we'll go on other investment income and withholding tax on investment income, where we will see how do we tax income from shares, income from investing in this thing we call compte bloque, yeah, the fixed whatever, the bank account which earns you income. When you buy bonds in government, when you sell your rights, your intellectual rights, if you write a song and you sell the rights, if you write a book and like a movie, like those, there's a lot. If you program and make a software and you sell it, intangible assets, all those, we'll go through them. But I want to tell you one thing. I want you to be more prepared. This session should only help you. The reason ICPAL brings us here is not to teach you from scratch. Actually, I am doing a lot more than my work because I know our education style. And I know most of you are either working people, parents, mothers, fathers, and you don't have enough time. So you've missed class here and there. So I try to go in too much detail because I have spear at heart and I want as many people to graduate, and I want people to understand this tax law of our country a lot more than I understand it. So feel free to ask me any question, okay? So rental income tax, we look at it from 2 angles. There is one where we are renting buildings. There is one we are renting machinery and equipment. Okay, for buildings, principle number one, the law considers 50% of the income as expenses. Now, I don't want you to get confused. If they ask you a question, bakakubwira ngo harimo umusekirite, harimo gardener, the guy who, you know, kupa, the guy who does the garden, the security guy, the guy who does maintenance, abo bose, it's just an illusion. The tax law, Rwanda Revenue Authority has no time to go into those details. They allow you 50% of your income. If you used less, good for you. If the house cost you more, bad for you. You do not consider the actual expenses. The law allows you 50%. Okay? The second thing the law allows you to deduct from rental income is interest. If you have proof that you took a loan to build the house, you deduct the interest that you incur on the loan to purchase the house. Okay? Are you clear? When the taxpayer produces proof of the bank interest paid on the loan to purchase the house, it is determined by deducting from the gross rental income 50% considered as expenses for upkeep. So you deduct 50% of the income considered as the running expenses, and you deduct the actual interest expense that is on the rental income. If one of you have a house somewhere with tenants, this is the law for you. Then there's where you have these big tractors, these caterpillars making roads, these big tractors which plow, these machines, hinga, all those big equipments, not cars, please. Panimodok, Havari stealing, Havari camion, no. These heavy machinery, you know them. These ones, zitsindagira umuhanda, zichukura amabuye, zigira gute zihinga, ziri all those big. To calculate the rental income from the equipment and machinery, one, we deduct 10% of revenue as deemed expenses. Number two, we deduct the actual interest paid, if any. Number three, we deduct the depreciation in line with tax depreciation rules. Tax depreciation rules on this machinery is 25%. You know that. Because here, if I take you briefly, but if I take you here, you will see that all other assets that are not land, that are not building, that are not intangible assets, that are not accessories and computer, it is 25%. Okay, reducing balance. We go back to my slide here. That is rental income. Are you with me?
Yes.
Thank you. Now, quickly we rush into a question. After completing your CPA, you're employed by one leading audit firms in Rwanda as a tax manager. You have been assigned a case to advise the investor who wants to invest in Rwanda. He has identified two investment opportunities that are either to invest in commercial buildings or to invest in machines and equipment. Each of them has identified an investment of 500,000, each of them. The investor will raise the required money by using 70% personal savings and 30% loan. The investor has identified one bank which is willing to give him the money at an interest of 12%. The investor has forecasted with much certainty that the rental income from each of investments will be about 187,400,000, whatever, 1,500. The investor wishes to operate as an individual. Advise the investor on which best option if he wants to minimize the tax liability as much as possible. I chose this question because it touches both alternatives of rental income perfectly. Okay. Again, to try and not waste your time, I brought it here. Okay. I'll make it disappear, and then we come here. So this is the question. I brought it here. All right. Now we start with the investment. Investment in rental property. So the investment in rental property, the gross income, yeah, it was 187, 400, 500. Okay. So we have to less the costs. Which cost do we subtract? What do we do? Which cost do we subtract before we tax? From the tax law, what do we apply? Which costs do we apply?
We deduct first 50% of revenue as allowable expense.
Thank you. Very smart. So we have to deduct 50% deemed the expense. So we simply say this times 50%. Sivyo? What else do we deduct? What else do we deduct?
We deduct the actual interest paid, if any.
Is there interest? Do we have interest? Yes, because he got a loan. He's going to get a loan at 12%. Okay. But this 12%, the loan is going to be 30% of the cost. The cost is 500 million. He will finance 70% with his money, and he will get a loan at 30%. All right, at 30%. So what we do, we get so we say 30% of the 500 million. We apply the interest of 12%. Okay. So we basically say, we can even start here and say, he will get a loan of at 12% of 12% of, he will only get 30% of the 500. There. You understood why I got 18 million? Thank you. So this is our total taxable rental income. Out of 187 million. Rwanda Revenue Authority allows you to take away all this money. They will only tax you on 75. Now, let us start taxing. How do we tax? From 0 to 180,000, it is 0%. From 180,000 to 1 million is 20%. So I simply have to get 1 million minus 180,000 times 20%. And above 1 million is 30%. So I simply get this total income minus 1 million. I get this income here minus 1 million times 30%. Okay. So this is my total tax. Okay. This is my total tax. You don't have to be like that. Have you understood what I've done here? Remember, what is our question? We want to advise the investor on which option between option 1, investing in rental property, and investing in equipment and machinery, which one is better in terms of minimizing tax liability? So what is our gross income? The gross income is the same for option 2. So we have to less costs. Which cost do we less under equipment and machinery? Which cost do we subtract? Which cost do we subtract?
10% of redeemable expenses.
Thank you. 10% deemed expenses. Very simple. We simply say this times 10%. What else? What else do we subtract? What else do we subtract?
We subtract interest.
Thank you. In the same way we did up there. Okay, so I just get this and I just, for me, because this is Excel, I just bring the same formula. It's 12% interest only for 30% of the cost. What else do we say? Is there anything else we subtract under rent of equipment and machinery?
Yes, we subtract depreciation, 25%.
Thank you. So we subtract depreciation at 25%. So we have our net taxable income. Okay. How do we tax it? How do we tax the rental, the taxation of equipment? Can even, if you're doubting, you can always, you always have the law. Let me try to look for. Okay. Equipment and machinery. Interest paid, depreciation. How do we tax income from equipment? How do we tax income from equipment? How do we tax income from equipment? Because remember, this person wants to do it as an individual. You see that? As an individual, which means he's going to rent this equipment as an individual, not a company. If you're doing it as an individual, we are taxing it like the payee, okay? So that's why we have to tax it like this. You understand? Because it's not doing it like a company. For rental income, it's like this for equipment, for buildings. But here, you're just an individual renting your machinery. You're not a company. If you were a company, it would be a different story. So this will be 0, and this will be 1, 2. It's the normal, 1, 2. Minus 360 times 20%. I always forget that time is nonsense. And then this is that minus times 30%. And this is our total income, total tax payable. Okay, total tax payable. So, okay, we deducted deemed expense, we deducted the interest on loan, and we deducted depreciation. Okay. Now, what would you advise this investor? What would you advise this investor?
I can advise him to invest in machine and equipment, as is where the tax will be reduced.
Exactly.
Second also.
So I would also advise the guy to go into rental of equipment because they'll pay less tax. However, of course, this is from a tax point of view. You need to remember these machines will get old. They will depreciate. The more you see this depreciation, it means they're getting old. The assumption is that in 4 years, they will be depreciated because this is 25%. But in 4 years, this person will still be making money. So obviously, it doesn't mean, hey, you should celebrate the bad investment in equipment in a rental. No, you can still be making this money for 20 years. You know that. But this guy cannot make this money for 20 years from this equipment. They get old and he needs to replace them. So you may be paying less tax, but I'm just speaking, okay? This is a tax exam, your job stops here. But do not get excited tomorrow and you sell your house to buy a tractor. You need to think beyond the 1 year tax implication. These assets depreciate, okay? These assets depreciate. Are you with me? So we have done this question. Okay. Now, there is another question I wanted us to do. I had picked some question here in December 2018. Let us see December 2018. December 2019. Oh no. Okay, I'll bring you back. Here I am. December 2018 was on question 6. No, this is not the one I wanted. There's a much better question. Let me see. Study text, page 161. Let me say November 2017, question 1. Question 1, November, this may not be. Let me see, November 2017, question 4. November 2017, question 4. November 2017, question 4, question 4. November 2017, question 4. All right, question 4. Anyway, I don't know why the question I was looking for does not come up so quickly, but let us see something else that is interesting here. We've just done this question here. Are you still seeing my slide, my screen, my presentation rather? Here. Just done this question and you've seen how rental income works. But there's this question here, page 161 in the textbook, which I'm sure you have. If you come to your textbook and you go to page 161, you will find a very detailed question, okay? You'll find a very detailed question on rental income. You understand? Can you promise me you will revise it? Because if I go into it, we won't finish. Are you going to revise it? You didn't answer. So you're not going to revise it, eh?
What's to do?
Please, you have to, because it's simple. It has questions and answers. Yeah, it's just a matter of going to that page I've told you, page 161. It's just, this was 25, just coming here. You just go to page 161. That's where you have rental income. Maybe I'm wrong. Rental income tax. Here. Okay, you see this question, Barabikwerek. Habineza after he has two properties. They show you for both properties. They show you property 1 and property 2. They show you the rent, they show you the 50%, they show you the rental income. Property 2, he has a loan. They show you how you reduce the interest. And they show you how you calculate the rental income. It is that simple. And the tax, that simple. Okay. You see where we did how we calculated the rental income for equipment. This is also another example. So around on page 41 here. Page 41, page 26, page 26. In the study book, you have this book, everyone. If you don't have it, please go on the website of ICPAR and download it. Be smart students, my friend. Yeah? It's there, free information is here. You just come and see the examples they have given you, and then you test your knowledge. Okay. Okay. All right. So let me come back to my notes. So I've given you an assignment. Even if you go here and revise this, what is here, you will have more understanding of rental income tax, and no question on rental income, be it on the rental of equipments, be it on rental of buildings, will beat you. Now, we have other investment income, taxation of investment incomes. We have capital gains. Now, this is capital gains, how it works, okay? Capital gains is, just think an example. Today, if Braliwa is selling its shares on Rwanda Stock Exchange at 250 francs per share, and you go buy 1,000 shares, that means you're buying 1,000 times 250. No, let's say you buy 1 million shares. So that's 1 million, 1 times 250 francs. You're going to spend 250 millions to buy 1 million shares at 250 francs. Now, then what this means is that once after like 2 years or maybe after 6 months, the price per share increases to 300 francs and you decide to sell. That is how you make money. You're going to have 50 francs per share. You can choose to sell all your 1 million francs, your 1 million shares. You're going to make 50 million francs. Okay, 50 million francs. That will be your capital gains, and you will be taxed on that 50 million francs. That is what you do. Okay, that's what we need. That's precisely what it means here. Okay, this thing is supposed to come from here the way. And then interest income is subject to 15% of the value excluding VAT. However, interest income from treasury bonds with a maturity of 3 years and above, it is at 5%. And then we also have exempted interest income. These ones are normally asked, randomly they ask them. Interest in fixed deposits in a bank for at least 1 year. If your fixed deposit money is for more than 1 year, the interest is exempt. Loans by financial banks, by foreign development banks are exempted from income tax in the country of origin. And interest paid by Rwandan bank to another bank in a foreign financial institutions. Dividends, they are subject to 15%. However, dividends from sales listed on Rwanda Stock Exchange for those owned by taxpayer from East Africa is at 5%. This one has had some changes in the new law. Okay? And here, I want you to look at this summary here. This summary is just something I tried to put together for easy of following. The interest on unlisted securities is 15%. The interest on listed securities and bonds with a maturity of 3 years and above, 5%. Dividends is at 15%. Dividends listed means if they are dividends in companies that are listed on Rwanda Stock Exchange, the withholding tax will be 5%. Loyalty income, 15%. Service fees, including management and technical fees, with exclusion of international transport, 15%. Performance payment made to an artist, a musician, or a sports person, 15%. Lottery and other gaming proceeds, 15%. This one has some changes in the new law. In the current law, when we look at the gaming, they exempt 30,000. You are taxed above that. Goods supplied by companies or physical persons not registered as taxpayers, people who don't have a TIN, 15%. Goods imported for commercial use, withholding taxes 5%. Payments by public institution to winners of public tenders is 3%. Unless if you have KITUS, what we call KITUS fiscal, the tax clearance certificate. Okay. So there is a question which is, in my view, the best question. It has, and this question is in the book, in the study textbook. It has everything. Huh? It has everything. All the withholding taxes. And I'm going to try and we do it together. I know you can as well revise it in your book, but let me just get it here. Okay, investment income. So I need to bring the question here. Okay, are you following me in the Excel here?
Yes, we are following.
Okay, so, no, that's not where I want to be. I have to come here. Okay, can you see my Excel one more time? Can you see my Excel? Okay, so capital gains tax. Number one, this person, John, received income from the following: 100,000 shares at 250 francs in Magendo Limited. Oh, what a name. A private company whose shares are not listed on Rwanda Stock Exchange. Not listed on Rwanda Stock Exchange. Not listed, okay? during the year sold 6,000 shares at 250 francs. Okay, so we can always refer to our notes and see what have we learned. Capital gains tax is 5%. Okay, and we have also seen here that capital gains, where is capital gains? Okay, I can also, for just to be comfortable, I can as well always look at capital gains here. Okay, so capital gains is at 5%. So let me come back to the Excel. If you can see the Excel, that's good. So we get the gross proceeds from the sale. How do we get that? We get the 6,000 shares times 350. Okay, so we have to get the 6,000 shares times 350 per share. And then the cost is the same 350, the same 6,000 shares, but this time at 250, because that is how we bought the shares. So it will be the 6,000 times 250. This is the capital gains. This person has made capital gains of 3,600,000. The capital gains tax is how much? 5%. So it is, we get this times 5%. Are we together? If you understood that number one, you can put up a hand for me to be sure you're following me. Thank you. Number two, invested 20 million francs in a fixed deposit account. Okay? In a fixed deposit account in a bank for a period of 8 months at an annual interest of 9%. So now, number two is interest. Number two is interest on fixed deposit account. Okay. How do we calculate it? We have, because remember, this is not beyond 1 year, which means there is interest and it's going to be taxable. So this guy invested 20 millions, 20. We're going to get 20 millions and we apply 9%. However, we divide by 12 and we multiply by 8 months. It only spent 8 months. Okay, so this is going to be 20 millions times 9% divided by 12 times 8. Okay, just to confirm if we're on the right track, because this is thing, I really got it from the book. Yeah, so it should be, yeah. Okay, it should be, unless I'm getting something wrong. Yes. Yes, 20 millions. No, once we do this, this is investment income. So this is our investment income. All right. And then we say withholding tax on investment income is how much? We're going to get 15% of the 1.2 M. So we are simply going to get this times 15%. So this is the withholding tax. Okay. And the capital gains, we saw that it was the shares were bought at 250. They were sold at 350. So our calculations are correct. You know, the book sometimes can be wrong because the book now, it says the shares were bought at 250, were sold at 350. But what they're calculating here is 359 and then 200. No, this is wrong. Absolutely, that is wrong. So what we are calculating here is correct. 6,000 shares at 350. The cost was 250. The difference is 3.6. Apply 5%. The investment income is that. Apply 15% on withholding tax, and you have your investment income, interest on investment income. Number 3, the guy received 8 million from investment in government bonds with a maturity of 2 years. If the maturity is 2 years, what happens? How do we tax in government bonds? We have just seen it here. Dividends on government bonds that are exceeding 3 years. I think we said it here. Dividend from shares, we said on the stock exchange 5%, but there has to be a provision on government bonds. Let me just read it from the book itself. Okay, so the point is, if the investment in bonds has a maturity of 3 years and above is 5%. But if it is not 3 years and above, it has to be taxed at what percentage? It has to be definitely at 15% here. So what we do, the net amount received is 8 million. But this is what you need to remember. Okay, this is what you need to remember. I actually have to bring here. Yeah, just like that. So if you have received, is it 8 million? 8 million, yes. If you have received 8 million net, you have to gross it up because this amount is taxed at source. The money you get has already been taxed. The government has already deducted 15% withholding tax. Same thing as the interest you get on a loan. The government has already deducted. Do you understand that? So we have to gross it up. If it is at 15%, we have to gross it up by 85%. So we say we get this money times 100 divided by 85. Because these government bonds, they have a maturity of 2 years. If it is 2 years, it is 15%. And this one here will be this money times 15%. Now, if I get this, if I come here and I say, this was your income minus this, it gives me this is 100. Sorry, yes, I was checking that. It cannot be 90,000. It gives me the 8 million difference. You understand that? Now, it means your real income was 9.4 million. But the government withheld 15% and gave you 8 million. If the question told you you received net of the net 8 million, you have to gross it up. You multiply it by 100, you divide by 85 if the withholding tax is 15%. If the withholding tax is 5%, you divide by 95. Basically, it's the difference between 100 and the withholding tax amount. Do you understand this crossing up, how I've done it? Okay. Now, I'm going through this because I just want you to be more comfortable, but I know everything I'm doing here is already done here in your book. I just wanted to give you more hints. Okay, dividend. Okay. Dividend income, it was listed in company, so it is 5%. Simple. Interest income, the maturity is above 1 year. You see here. You see here where they tell you fixed account in Sacco Bank with a maturity of 2 years. This one is exempt. Okay. Selling a copyright, it also has a provision and it has been given. If you spend time and first read and look at all these examples provided here and you go through them, you understand withholding tax properly. Okay. So to ensure that we finish what I had planned, I want to take you to something and we do another calculation on another withholding tax, which is on betting. Are you going to go back to your book and finish this question? Because I said you test your understanding here. If you will do it, just put up a hand for me. I want you to go to your textbook and you revise this question and those past papers that I've told you somewhere up here. Now, this gaming thing, we have a question here. Richard owns a betting company. On the night of the Euro finals between England and Italy, he collected up to 12.5 million from clients who betted in favor of England, but paid out 6,890 in favor of clients who got the bet right. Now, for those who are football fans like me, you know that the finals of Euro 2021 happened this year. Eh? Italy beat England at the finals. So there are people who were thinking England will win. I was one of them because I'm a fan of England, but I didn't bet, for the record. There are those who thought Italy would win. They both put their bet. What the bet you put is called a wager. Betting is called a wager. Now, there is a company that is receiving the money. So there are people who gave 12.5 millions in favor of England. It means the company took that money. They got nothing. But there are people who put their bet in favor of Italy. They got 6.8. The company had to pay them. Now, this Gaspar guy, his wager was 200,000 in favor of Italy, and he actually won 2 million. So out of 680, 2 million was for one guy. They want you to calculate Richard's tax liability. Richard is the betting company and the withholding tax on Gaspar's income. And when should the withholding tax be declared and paid? So let me try this, go to this Excel and do it, okay? Here, I brought it here, okay? I tried to do it ahead of time to save your time, but we have to repeat it out together here. So let me first do this. So what we do, the betting company has to pay withholding the tax rate of 13% on the net between the collections received and the payments made. So the collections received is what? The betting company collected 12 million. Hey, are you guys still following me? You asked me to not give you a break.
No, we are following.
It is quiet, eh? Okay, can someone else speak that is following me? Someone? Ngawanziza Samuel, are you following me? Aye, sleeping. Okay, if you're following me, you put your hand up and I see. So all these other people who didn't put their hand up, they're not following me. Okay, Thank you. I think you're following me. And then the payments made, they are 690. The net income is the total collected and the payments made. The withholding tax rate is at 13%. So the tax liability is the net income times 13%. This betting company has to pay withholding tax of 13%. The new law, this one does not change, but on the withholding tax of the person who put his wager, basically the person who goes there to bet, it has changed. The 30,000 is no longer exempt. All of it is taxed. Okay. Now, this guy, the principle is the same. He won 2 million. But how much was his wager? His wager was 200,000. The net income he won is 1.8 million. Okay, because 200,000 was his investment, kind of. Like, to make it sound more clean, they call it investment, but we call it a wager. And now how in the current law, there is exemption, okay? There is exemption of 0 to 30,000 is exempt. But in the new law, you will find that they are not exempting even the 30,000. All of the amount is taxed, okay? But for now, we tax it as is. So from 0 to 30,000 is 0. From here, from 30,000 to the actual amount, which is this amount here minus 30,000 is taxed at a withholding tax of 15%. So the total withholding tax is this plus this. Okay. So I've got, you understand how I've calculated this? Do you understand how I've calculated it? Who has a question? Please, I'm here to answer your question. Who has a question? Okay, so I would hope now you are understanding me. So there's been a lot of conversation going, and it's really, okay. Somebody needed a break. But the problem is majority said we continue. So I took the majority. Yeah. So Rwema, sorry about that. But what I've decided is that I'll leave the last 10 minutes of the session because we didn't really take a break, and me too. I need a comfort break. But this is what I had planned to cover for today's session. What will happen next time on Friday, I will start from here, corporate tax. We'll look into some details, quick depreciation, and then we will start practicing question. And then I'll take you to VAT capital deductions. Then I'll take you to VAT, and then I'll take you to other topics. And that will be all about our revision. Okay? So I really thank you guys for your attention. It was a terrific 4 hours, non-stop, no break, but you asked me to. I think next time I'll give a break. Okay, next time we will have a break, I promise you that. We started late today, so we didn't have the luxury to get a break.
When are we going to get this record?
a record now, that one, it is up to ICPA. I don't have it myself. ICPA gets it, they're the host, but me, what I'll do, you will get the presentation. I'll send the presentation to ICPA, and ICPA will distribute all of you. Okay? Do you prefer to sit for another 4 hours listening to this record, or you prefer the presentation and you go eat and the workings we have done?
We prefer to have a presentation.
I think so too. Because you don't have a lot of time, no?
Yeah.
Okay, thank you very much, guys. I really appreciate your attention and your creating time for today's session. It was good, and I hope, I'll try my best. I hope all of you, even others who are not here, but at least you, all of you, you pass. Okay?
Thank you.
You're welcome. Thank you. For now, I'll end it here. And we'll meet again on Friday, same time. Okay? Sorry?
Thank you.
You're welcome.